Oh, and with that, we're already live. Hello and welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald. As always, we are going to look at the markets. I'm going to adjust my positions, look what new there is to potentially invest in, and so on. However, as always, before we jump into it, let's get the usual disclaimer out of the way that you can also find at the bottom. Everything that I share in this live stream slash video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and last but not least, make your own decisions. And with that, we can actually, in quotes, jump right into it. Now, yesterday was a holiday on holiday in the US market, so pretty much all of our position didn't really move in any way. I can hide the overlay. Now, come on. And as a result, I moved the camera here, I guess, in this corner. And as a result, nothing really moved. Now, we still have our options for June in GameStop. GameStop moved on Friday. Last week actually went decently well. We finished it, I think, with 14% profit or so nothing to complain about. Pretty much only made one mistake, and that was to buy back the 1950 and the $20 put option that I had with expiry last week for GameStop. One of them at a small profit, the other one at a small loss, because GameStop was trading at around 18 or yeah. So according to my own analysis in quotes, yeah, and again, that's just my opinion of how I think things are going. What do we have? GME. I expected that worst case we will go down to that. We need maybe a 4-hour chart to 17.65. We went down here to 17.7. And then only after hours. So, I mean, we started to move back up, but we were still below the 20 mark. And only once the market closed, we actually then went above 20. And that is because GameStop then announced that they finished their share offering. So they sold another 45 million shares, which dilutes the stock by 15%, however, which increases their cash on hand from around 1 point something billion to 2 billion or 2 point something billion. Which pretty much kills any kind of short pieces there might be for the stock, because their earnings during their recent earnings were already positive simply because of the interest they receive on the $1 billion. Now with $2 billion, they obviously could do acquisitions and other stuff and so on. But yeah, so the only bad move I made was closing that option, and I only closed it because we still have exposure. So we have like with those two options that we sold that have an interesting risk profile, because or sold and bought. So because on one hand, okay, it will not show that until the market opens. But on one hand, we sold the $20 put contract and received $350 premium for that. So that's $600, $700 in premium that we got for those two. But on the other hand, we also bought twice the $100 call option, both with expiry in 21st of June. Which means that if GameStop falls below 20 or is below 20 at June 21st, we would get 200 shares for $2,000 each, so $4,000 total. However, if it rallies up until then, we also don't get a graph right now for that, or yeah, we'll get a graph once the market opens. So if it rallies up, the $100 call option gets into profit, and potentially if it rallies up, both get into profit, because then the $20 put becomes less likely, which means we can buy it back cheaper or it expires worth less. And the $100 call option gets into profit because it comes closer to the $100. Should there be something in the direction of a short squeeze or something like that, then we'd obviously still profit, because we have the 200 shares exposure through the call option as well. So this way it's kind of like a compromise, because we got $700 for the selling those two $20 puts. But on the other hand, we only paid $240, or not even slightly below $240 for those call options. I made it this way because it was the most, or it was the scenario with the $100 call where we still earn a net premium that's decent. I could have also gone for only getting the $40 or even $30 call option, but then I would have only earned net, I don't know, $50 premium. However, it would give a better upside exposure. We can look at it once the market opened. Anyway, so besides those two that have an exposure or capital requirement, if we get assigned of $4,000, we also have the June 21st $10 put. So if we fall below $10, we would have to buy another 100 shares for $1,000 total. I received $24 for that option. It's not that great, but it's still not bad. So theoretically, if GameStop were to fall below 10 until June or by June 21st, I actually would have to buy 300 shares of GameStop for $500. So let's do the math. So that would be 500, no, 5,000, not 500, yeah. So divided by 300 shares, so that would be an average of 16.66. However, on the other hand, we would have to buy a set $5,000 worth of GameStop, but we already earned a premium of 460 for the risk reversals, and what was it, 24 for the $10 put, 24. So technically, our average would be at $15.05. So, however, because GameStop was moving like it did, yeah, I bought back those options. Now, it would have been smarter to not do that and just accept the additional $2,000 or actually $3,950 exposure, because it rallied up after that because GameStop made that announcement. What's the difference? So I bought back one of the options. Where do we have option wheel? GameStop. So I bought back one of the options for $190. So actually I bought back we had more. I sold actually 3 additional options here. So the exposure was for 400 shares total, yeah. So although that I bought back with a $45 profit. So I sold it for $906. I got it back for $860. So that's not that bad. However, on the other one, that one I sold for $100 premium and bought back for $190. So technically, those two options combined, so it's like a $50 loss in quotes. Not a lot, but still. And however, if I would have kept those options, one of two things would have happened. Either they would have still assigned, which means today at market open, I would have actually held 400 shares, so it would have been quite a decent exposure, yeah. At slightly below $20, because one of those options was for $19.50 and the other one was for $20. And those 400 shares would now already be worth more, or at least at market open, they will be worth more. So like with a 20% profit. And the other option is the person that bought the put options would not exercise it because in the aftermarket it rallied up, in which case nothing would have changed with the difference. Actually now it's like, yeah, like the difference would have been, I would have pocketed $1,000. So either way, yeah, like so. Either way, I would have pocketed $1,000, which I didn't because I was forced to buy things back. So I got $1,007, but I bought it back for $1,049. So that's $42 loss. Versus if I wouldn't have acted on Friday, it would have been not only $1,000 more in the portfolio, and with that another 10% return or so on the portfolio, since it started out with around 10,500 euro. But on top of that, I would have had 400 shares at roughly 19 point something that are now already, or right now at least, yeah, almost 20% up there. So, I mean, it's still a profitable week, and any two-digit return, especially within a week, is definitely nothing to complain about. But understandable, I would have loved, or would have, could have, should have, if I would have known, I would have anticipated that GameStop already completed their sell at market, definitely would have held on. Yeah, this way I figured, okay, if I end up with 400 shares and then I have the exposure for another 300 shares, it just would be like way too much exposure. Now, additionally to that, right now I still hold 2 penny stocks. So there's that CRKN and GWAF. We can look at it in Motive Wave. In case you're wondering, the software I'm using, the broker I'm using, and so on, everything is linked down in the description below. They are obviously trading in cents. You can see that my CRKN position is at a small loss of, I mean, I bought 1,000 shares, so we're talking about cents here, so around $100 investment. It's currently at a loss. I believe that if we use Elliott Wave Theory, which you can also find the link to the book that you can read online for free, or grab yourself a physical copy like I have, that we might look at a 1, 2, potentially either 3, 4, 5, and then that's 1 and wave 2. or that's 1, 2, 3, 4, and we get wave 5. So if that's 3, 4, and 5, then we would expect to go up to 0.42 or 1.16. That's where I already have my limit sell order. If I'm wrong, obviously, there is also the chance we go further down. If that would be 1, 2, then we would expect to go potentially higher than, so if that would be, I don't know where the low point right now is, but roughly, if that would be 1, 2, we would already expect to have it shoot up to potentially 3. I probably should replace that limit sell order with a trailing stop. So once we reach 42, to keep a trailing stop from our actually from our average buy-in, so that we cannot close it at a loss anymore. With increasing in cents, so we follow them. So once we hit this, every cent we will go up, it would also go up here. But yeah, we'll see about that. So maybe I'll change that later. Yeah, then GWAF, we also have a position that's there. We also, let's zoom out a little bit. Same situation, a similar situation, although I think that would need to be already a complete wave here. If that's wave 3 and 4, unlikely but not impossible, then we also get our wave 5 targets. However, if that is a complete wave, we get our first target at the $1 mark, which would be an incredible increase. For that here would also need to be 1, 2, 3, either that's already 1, 2, 3, 4, 5, making that another wave 1, where we could then apply the extension here and would as first target get the 25-cent mark, or potentially the 261, so at 69 cents. Or again, I'm wrong, so which is possible that I'm wrong, and we just go down. But overall, those are just gambles, in quotes, with like very, very low amounts of capital commitment. So like anywhere from like $50 to $100. Basically, because the stocks are so cheap, buying 1,000 shares is not that much. And if it really were to rally, the profit, at least as a percentage, is incredible. Definitely wouldn't throw my entire portfolio at that, because it just isn't worth the risk. Yeah, like, I mean, obviously, if somebody would have caught that, I mean, some people have, but if somebody would have caught that at the 4-cent mark initially, and then make that rally similar to FFIE, where currently we're selling put options at $1 and at 50 cents, or we sold, where also it went up from 3 cents something or 3 point something cents to multiple dollars. Congratulations to everyone caught that move. The question now is that already over, or was that like some counter trend move and we go down from here? Here I also believe that basically actually we still have room up, but I will not enter at a price of $1 per share, because it's a crappy company, and like then buying something like just 100 shares isn't worth it. That's why I decided here to sell put options. So we have our $1 put option, which paid us $50, which means if by June FFIE falls below or is below $1, I will have to buy 100 shares at $1, so which means $100. I've already got $50 for the option, which means my average would actually be at 0.5. Yeah, so that's not bad. And the second option that we sold was a 0.5 put option. So if it falls below 0.5, we would have to buy another 100 shares, and we got $20 for that, which means if that one triggers, just that one isolated would have an average of 0.530. So then we would have 200 shares total with an average of 0.45. Yeah, and I can live with that. I mean, even if it goes down again, the loss would not be big. So yeah, I can live with that exposure. So on one hand, we would have, if we fall below 0.5, I would have to buy those shares for $150. If I don't sell the options before that, so if we rally up, I can sell them and realize the profit, the maximum premium. Yeah. And on the other hand, even if we have to buy for $150, we actually already got $70 in premium, so our total buy-in would only be $80. So actually our average would be at $40 then. Yeah. So at 40 cents, sorry. Per share. So still pretty much good distance from there. Yeah, it seems like it's relatively stable. If we look closer, yeah, with all the extensions and expansions that I have here, it's hard to see. Pretty much either this is already the entire correction, or this is wave A, and then now that's wave B, and we would get wave C, which means that there would be room down, and yeah, I would end up with some shares. However, if that's already the entire correction, that would be wave 1, A, B, C, for wave 1, 2, and then here we would be in the beginning of wave 3 with another 1, 2, 3, 4, 5 potentially, or it's somehow 1, 2, I don't know, 3, 4, 5 till here, A, B, C, and then we should go up from here. So like hard to say which one it's going to be, but like overall, I'm happy with those put options. I wouldn't want to own the shares because the options we actually got paid for. Whereas if I would buy the shares, my loss would be bigger. And I'm happy if I just pocket the what's it total, the $71 in premium, yeah. So I'm happy if I just pocket that on the trade, perfectly fine. Didn't have to hold the shares, nothing, yeah. Yeah, so that's that. There is another position I'm currently considering, and that's PUD. There, I think, based on the pattern, again, it's like, again, a penny stock. That one even only trades on the OTC. So, yeah, not even on the NASDAQ or some other proper exchange. However, it's so cheap, as you can see, it's a fraction of a cent, that if I'm right with my pattern, then that would potentially be 1, 2, and then we're in wave 3, and in this wave 3 we have 1, 2, 3, and should get wave 4. And if that's the case, then we should drop and at least hit this line. We could potentially drop further here, yeah. But I'm okay with getting in at 0.00, so 0.0026, so a quarter of a cent. And at that price, if I throw $100 at it, which again is then just gamble money, it would get me around 20,000 shares, or 20,000 shares would even be slightly less than $100 if I, let's double check the math, yeah, so 20,000 times 0.0026, okay, it would be $50, not even that, yeah. So I'm okay with that, and if then that pattern turns out to be true, 1, 2, 3, 3 would then already actually have the first profit target at 8 cents, and the second one at 0.8 cents, sorry, and the second one at 6 cents, which would be an incredible profit on the position as a percentage. So we look at profits as percentages, not in absolute amounts, because obviously if you throw more money at it, then it's more in absolute dollars, but we also have to be risk averse, but risk aware. And that's what we have right now. So now I have a, what do I have? I have a, sorry, just gonna drag that one over here real quick. Yeah, I have a list of things that I want to look at today, but most of them we can only look at once the market is open. Just one of those I have to move in a different list so I actually see it. There we go. So yeah, and while we're still waiting, there's still 14 minutes left until the market opens. I'm gonna check. So usually what I do is I'm active or semi-active on Reddit, and I'm there in like the interactive broker, options trading, Wall Street Bread, short squeeze, GameStop, and whatnot subreddits. And then I just fly through what's on my home screen. I mean, there's also some other stuff. And whenever somebody is like, check out this stock or so, yeah, I just save the post. So that one would, for example, say OPTT is popping off, yeah, so from 24 minutes ago. So we're gonna save that, and then when the trading day starts, I go to my profile, I go to saved, and then I work my way through this. So the first one would be OPTT. Now the first thing I would do is edit in Motive Wave, which is connected to Interactive Broker, so that's my data source. So basically all the prices we see here are the same ones that are currently on Interactive Broker. And I would zoom out and look for if there is a pattern. Now in this case, we see the pattern is like a complete clusterfuck and just going down with basically a bounce here that likely subdivides into an ABC pattern. If we zoom in further, probably not on the, yeah, even on the monthly chart, we might be able to see this as ABC. And then the question is like, why would there be a stop? Yeah. So then the next thing, what do we have? OPTT. The next thing I do is just, or actually Market Watch, OPTT. Yeah. And there I just want to quick have a look at the financials. And all I care about is like the direction right now. So we see, okay, from 2019, they more than doubled their revenue, then it stagnated more or less, and then they increased it again a little bit. Cost of goods, however, is relatively steady, which is interesting. Or like, I mean, here they have spent twice as much as they make. then it's actually spending a little more. Here again, spending twice as much. Here it's again roughly the same, and here it's again roughly the same, although still not profitable. Yeah. Now we could look at other things. Yeah. So, but overall, it's a losing business. Now, what are they doing? Engages in commercializing proprietary systems that generate electricity by harnessing the renewable energy of ocean waves. Okay, it's actually not a bad thing. Yeah. So probably takes a lot of effort to get built and then deployed. So, but it's something that could pay off in the future. Now, do we also see that in the financial? No, not in the financials. Where do we have that? No. Anyway, so the next thing we need then for OPTT is OPTT short interest. You see how heavily it's shorted. That number is not up to date. I could pay for an Ortex subscription to have like live data. We see there is actually, latest status that's reported almost no short interest. Yeah, although it still says 1.78 days to cover because there seems to be not that much volume. So volume, okay, here we talk about millions, and here we also talk about millions. So yeah, so looking at that, I see that as some kind of bounce. We could look at insider information, so how many insiders are buying and selling, but it feels like it's not worth getting into. Yeah, so it's like we can also throw the automated Elliott waves on it. Yeah, and then we would. If we go on an, I don't know, 15-minute chart. Nope. Okay, then we would see this here might be actually, I mean, the auto count is a little bit different from what I would suggest here. It would probably be 1, 2, 3, 4, 5, which means one wave is done, and we might get a set like our ABC, or ABC could go further down. And then from here, there could be another wave up, even if it's a corrective pattern, but we're not going to be able to determine the right entry. The other option would be that that is somehow 1, 2, 3, 4, 5. No, not another option. Oh yeah, ABC, and then we have another 5 waves, so that's already the entire ABC move, and then from here we go down. So we're gonna stay out of this one and actually ignore it. Now, if we wouldn't stay out of this one, then I would next check if there are options for it. If we talk about those small prices, then probably likely not. And if there are no options, I would then ask myself if I want to throw like $50 or $100 at it just for the potential gain with like really, really limited loss potential. Yeah. So I don't need. So now that we looked at that, can we move it from saved? Then bought some. Okay, cool. Yeah. So good luck to everyone that bought it. Yeah. So now next one would be SMFL. So basically, that just outside of like selling cash secured puts and covered calls for premium or so, that's in my opinion. It's a good source to get some ideas of what to look at. Yeah, quite some revenue growth. So I mean, here it's 300% from 2020 to 21, and then still to 22. Definitely not too bad here. And what are they doing? So sorry, not estimates, but profile. Wellness company engages development, marketing, manufacturing, acquisition, operation, sales of broad spectrum nutritional. It sounds like a multi-level marketing thing, yeah. But yeah, let's check it out. I already had it on the list. Okay, so probably already looked at it at some point. Yeah, like that doesn't. Let's go monthly. Yeah, that also looks like a clusterfuck. Like, I mean, they definitely had some reverse stock split. I don't think they ever traded that high. So they've been falling, reverse split to make the stock price higher and so on, and just been going down. And yeah, to me, there's no discernible pattern here that we could trade off. If there would be options, we could try to, I don't know, like everything that's below the current price. So like a $2 put option, what was it? SMFL. Okay, so yeah. SMFL. Okay, there are only stocks, so we're not going to touch that. So I'm not going to buy those shares. With options, it would have been okay at like $2.50 or $2 selling a put option. So getting premium. If we stay above, it's good. If not, but then we would have $200 exposure in a stock I wouldn't want to be in. So not sure if that would make things much better or interesting. So that one's also a bust. And back we go. We move that. Yeah, that's something different. So okay, yeah. Yeah, I mean, it's an obvious currency risk. Okay, yeah, don't need that anymore. But that I will read later because it's also not about a specific stock. Then we have this one, high short interest stocks. So we already looked at SPWR, don't we? Didn't we do something there already? We sold the put option, wrong sheet. SPWR. So yeah, we sold the put for $10, but it's like the premium there is not high enough to justify it. Yeah, I mean the exposure would also, yeah, we don't see the premium for another 5 minutes. Here we got a notification. Earnings. One or more companies will announce earnings. Yeah, okay. So tomorrow GWAF will announce earnings before open. So basically, my position tomorrow will either shoot up and we'll have to replace that with trading stop orders, yeah, or it will come down crashing, and then that's a 1,000 share and $84 gamble that went wrong. Okay, so and SPWR, I mean, we don't see the premiums right now, but okay, we'll have to wait and then check that later. So, and Barnes and Noble, I'm not sure if we still have it. There we have it. Yeah. Also, you can see premiums, of course. Yeah, but from the chart, yeah, there we have an alert. I think we finished 5 waves up, but it's hard to be sure. AutoWave says also potentially 5 waves up done, which means we would expect some ABC pattern that gets us at least to here. And if we go to here, then we may be entering that. I mean, the overall chart probably also looks like, oh, actually, yeah, not too bad from the data we have. So, I mean, went down, up, down again, yeah, but that could be the bottom from where there is recovery. There were also some positive news about Barnes and Noble. If we look here on the daily chart, it actually looks like it's some kind of 1, 2, 3, 4, 5, potentially not even finished, yeah. Could also obviously be a different pattern, but just on first glance. Whenever we look at such cheap stocks, I don't really want to pour a ton of time into them, because if we look at those, or when we look at those cheap stocks, it's like it's not worth the effort. I'm not going to throw thousands of dollars at it. So I'm just trying to figure out, does the pattern offer a potential entry where if I if I get 300 shares for 34 cents, for example, would be $100 investment. If the pattern that I see is right and we go up from there, it might turn into $200, $300, $400, and it's great. Yeah. And if I'm wrong, it's like I can still sell it down here and have whatever, like a $50 loss, $40 loss or so. It's something that really doesn't hurt, especially if on the other hand we are selling put options like for GameStop that pay huge premium because of the implied volatility. Yeah, and so what else do we have on the? Yeah, I'm not going to go through the entire list. I looked at a lot of them already. Mara is also interesting. If I recall it correctly, they are a cryptocurrency mining thing. Yeah, so digital assets which engage in mining cryptocurrency. So which Mara, which should in some way correlate with Bitcoin in some way, because obviously as Bitcoin goes down, they become less profitable, and as Bitcoin goes up, they become more profitable. Now, the question is here from that high, I mean, here we clearly or relatively clearly have 1, 2, 3, 4, 5, so we have 5 waves up. Now the question is that correction already finished? For that, that would need to be, and it can be, that could be 1, 2, so A, B, C, but that can also in some form be 1, 2, 3, 4, 5. So then that would be wave B, 5. So A, B, and C, and then from here we would actually drop down. But the options for Mara, again, we don't see the prices for another 3 minutes, yeah, or 2 minutes. We also made a, we can check in the history. So Mara, yeah, there I mistakenly misclicked and bought the stock and then sold it. So or actually shorted the stock by mistake and then sold it. So for a $5 loss. But the option itself also, yeah, paid $30. I don't know which call price or strike price we had there. But yeah, like we can check Mara out again. So overall, however, then the question would be if we don't, sorry, 1 second. So the question would be if we don't look at to getting put options, because from the look of it, let's see what auto labeling would suggest. It actually would suggest that from here we have 1, 2, and 3 down. So yeah, so further down. Yeah, let's get rid of that. So, but for me, the look of it would more be like okay, that's going to be A, B, C. Yeah, although C would then be down, and in that case we would have 1, 2, 3, 4, 5, and that would be, that one's going to be tricky to label because it should be A, B, C. So possibly, so we could sell it. No, we could sell, if we sell a call, we obviously have the risk of if it goes higher. If we buy a put option, so we could consider, so we don't have, we never want to have unlimited risk. Yeah, so buying dollar, I don't know, like 25 put, we just would have to figure out on for what expiration date and how much it would cost us, and then how profitable it would be if we write. Yeah? But if we buy a put option, we buy the right to sell 100 shares at 25. Although, yeah, buying at 25 would be expensive because it's right now in the money. So we would actually have to consider buying a $20 put option, not a 25, yeah. So that it's right now out of the money. And then if it goes down, our option increases in value. If it goes up, we lose the premium that we paid, yeah, if by the end we're still above, yeah. So we can, market's now open, so we'll get option information. Yeah, so that's actually important. And for a second, we'll also quickly check back to, first of all, GameStop is now at 23. Okay, so, and second of all, where was it? What was the other one? Gonna have to check. The other one was Beauty. So OTC should also be open. Yeah, Beauty, yeah, and it's up a little bit. Okay, let's see how that goes if our order triggers here, yeah. And the other one, GREF and so on, yeah, market looks quite green today. We see a few things are not that green, but yeah, let's start. So we start by doing GameStop. So there, let's see what the premium is for the weekly options. So now, because GameStop now has 2 billion in cash, like my risk profile changes a little bit with that, because yeah, that's not worth it, or is it? So our exposure right now is, and I'm gonna use a calculator again just to be sure. So we have 20 times 2 plus 10 plus 0.5 plus 1, and then the other one is a call option. So we really only have basically 20, 40, 50. Oh, we also have that INSEM put that we shouldn't forget. Yeah, so we have an exposure from, and INSEM has an announcement upcoming. So we have an exposure to buy shares for $6,400. So okay, just a second. Okay, so we have theoretically $6,950, so $7,000 that we don't have exposed yet. So theoretically, we could sell this option 3 times, which would give us an exposure of that kind. But on the other hand, we would only, if we take the mid price, we would get $400 credit for a $6,000 exposure. We could obviously go closer. You see, if we would decide, okay, we sell the 22 put, then our profit. Let's look at the chart. So let's look at this chart for GameStop for a second. Yeah. So, and the pattern for it. So if we zoom in, our question is, where could we go? So if that's 1, 2, 3, 4, 5, we would actually now get a correction, which means which actually is not a bad idea. So we can delete that. We can delete that, because if we get a correction here, then we would assume that it follows the pattern here. We're going to zoom in a little bit more. So that should turn into an ABC pattern. So the minimum it should have to reach would be 22. It could, however, fall lower here. So, but 2035. However, we also see that there is the option that it goes, okay, further. Although that already looks like that might turn into ABC. So it's a little tricky. Also, obviously, there is so much flexibility to Elliott Wave Theory, but in that case, we would assume that we at worst go down, and that's probably ABC, and then 1, 2, 3. So, I mean, don't want to go much closer. But that would need to be wave 1. And we bounce from the 438. So potentially that could be 1, 2. Yeah, we need the minute chart here. 1, 2, 3. Now we get 4, and then we get 5. So there should still be, in my opinion, a push down. Yeah. So we zoom back a little bit. Not that much. So if there's still a little push down, we can actually wait. And then, because when we go down here, I'm going to drag that to the other window so I can keep an eye on it right now, because when we go down here and we assume we will not go below 21.6, no, wait, sorry. C target would be at 20 and 18. So we stay with the $20 put option and can get or sell 3 pieces of that. However, as we go, and just post that for $2 per piece, so that would be 10% return. So obviously, if we don't go far enough to trigger that option, then although I wonder if the weekend gap, so if we don't have the extended data, so I'm going to bring that back, if we'll close the weekend gap, which would be at 1960, yeah. We don't have to close it, but very often gaps close. Now, if that were the case, then that would need to be a finished wave, and then that would become possible. And in that case, we could actually then sell the 1950 put, which reduces our capital commitment, but also get paid more for it because, yeah, so tough choice. So I could list the 20 put for basically $2, so which means we would get $600 in credit or 10% of the capital that we put up, and it actually would mean that if we go below 20, our average would be at 18, so it would still be okay, especially since we only went to 1770. Yeah, my risk reversals, they're actually working quite well right now, so we already realized half of the potential profit. So if we, on the upside, we see we have $506 potential. I mean, we already got the premium, so actually it's like 462, yeah. And unless we go higher than 100. Now there are 2 things that we can do here. So first of all, once the put option we sold has its maximum profit, theoretically we could already close it, but then instead of $700, we would look at $460 that we received here. So it reduces the profit. If we believe further that we stay above 20, the only difference is if I close those. Actually, if I close those right now, I secure a profit, but I also free up a decent portion of the capital requirement, which means I can sell more. Although it also removes my upside exposure. I mean, I still hold a couple of shares. So at computer share, but it doesn't have the same upside exposure. And obviously, if the price moves up, our profit here would actually increase. So tough choice. Yeah. Then the INSM put here, that actually is interesting. If I buy that one back right now, is the market closed for INSM because of the upcoming announcement, or checking real quick? No, market is open. So why do we not have options here? There's just no volume. And I'm confused a little bit by the profile. It says 219 prof. Okay, there is something. Oh no, that actually is nice. It really goes for our options. So INSM today doubled in price almost. So did you have the announcement today and it was positive? So I'm gonna Google that real quick. So proving its theory in a large untapped lung disease market. Yeah, so cool. So actually, yeah, probably nobody's gonna buy, or no, actually nobody's gonna sell the put option. So if we would want to buy it back, I don't know why it says 219 in profit, because our maximum profit is actually the 126 that we sold. So probably because there is no volume. So we'll just have to wait for this to expire, and then we pocket the 126. On the other hand, they also don't really have to consider there any risk anymore with that, because now that they had the positive announcement of the treatment, of course, they will bounce from $50 to something more reasonable, and before they then continue their journey up. But the chance for them to fall to $12.50 is with that pretty much eliminated completely, because now with a positive product, they should obviously be, or positive outcome of their studies, they should obviously be worth more than what they were before they announced that outcome. So yeah, back to GameStop we go, and wonder if and how. If we consider the extended data, GameStop, yes. So for example, now we are moving towards 2150, and that 2160 is actually one of the potential target areas, but it's hard to, or actually it's not too hard, but if that's 1, 2, and that would be 3, 4, 5, then we could already be done here. No, okay, we'll go further. So then that's 1, 2, and that's another 1, 2, 3, 4, 5, and then we get another bounce, and then we get a push. So 2080 would be the potential area we could go to. Now, if I close those, I can re-enter them at 2080, but I would only secure the current profit of 238 and not, if I select close, get $300. Wait, what? Sell? If I sell those, I get $300. If I just sell the put, it means buying it back, I have to pay 400. 380, and I sold it for 350, so they are actually right now at a loss. And if I close those, so those I sold, I bought, so I would have to sell them, and the middle price would be 108, so I bought 119, and I would only get 108. So actually that position is right now at a small loss, so if we consider it right now. Okay, so we'll keep that one open. So I still think that the 20 June call in combination with June put in combination with the call is worth it. So yeah, the 10 put, there's no point in, if we close that, I would have to buy it back, and the mid would be $12. So I would realize $12 profit. So overall, I mean, there the percentage is not that great. I mean, we're talking about 2.4% return here on the $1,000 commitment. Crocs now crossed, that's another thing where I set up an alert, crossed 155. That's going to be interesting. So, okay, with GameStop, we still wait a little bit. It should drop further. We should get more for selling the put option. And for Crocs, I had the alert that it should cross 155. May have to zoom out a little bit, but I believe that looking at this, that this here is in some form 1, 2, 3, 4, 5, and then in wave 5, 1, 2, 3, 4, and then the question is, do we have 5 waves here? So 1, 2, 3, 4, 5. I think we have. So basically here, that part, 1, 2, 3, 4, 5. If that's the case, then we go down from here. So we can, for Crocs, yeah, let's sort that. Do we still have Crocs? Okay. Yes, so for Crocs, we can check put options. Now, we obviously wouldn't expect it to go down that week, but if we are right, we would say it's I don't know, like even the 154 or the 150. So if we zoom out a little bit on a daily chart till the 21st, it's still here. So if we are right, it would basically top here, maybe go a little higher, and then we start our downwards move. So, and then by June 21st, so we could be at, I don't know, 138, or if that's 5 waves finished, we would correct further. So we just have to check. So if we say June 21st, the 151, if we buy it, would have 146 as break even, and the mid price would be $313. So what do we expect here? Yeah, there it disagrees with my assessment, but I think that might already be done here. So I said, so if that's the case, then we'd potentially assume that from here we could go to 114, but that would obviously take, so from here, that was January till April, so 3 months pretty much. So, and if we take something with 90 days out, would be too much. Okay. Then our capital commitment would be higher. But if we buy that one, middle would be, okay, now we're dropping a little bit. Yeah, so okay, let's say the 145. If we buy that one, our profile looks like this. Our break even is 136. 136 would take us till here. And if we reach 114, 14, yeah, there is the risk reward ratio is not there. So like, sorry. Thought I had to sneeze, but no, maybe later. Yeah, so risk reward ratio is not good enough if we have the option that long. And if we have it shorter, problem is like the risk of it expiring. Now, obviously, we could get the June option and then basically pay 300 for that, or get even a lower one. Yeah, so and as long as the price moves down, so as long as the price, I'm not sure how it's doing right now, hourly, yeah, so it already bounced. Like there was literally the point where I thought it would bounce, and now we're, I mean, we're minimal, a little below that. But if it were to bounce from here, then so if it starts to go lower, the June option would already become more valuable. But the question is, would we drop below 150 or not? So for example, if we go for the 150, or yeah, and that would be, and we could roll it then, but rolling means basically whatever loss we still have on this one, we realize. And if we then fall to 130, that actually, I mean, but for that it would have to happen till June, so in basically 3 weeks, and that's not going to be the case, and most likely. Okay, so we're going to skip out on that. I set the alert and it happened, but yeah, it doesn't look like worth the risk in that case. Now, another thing I wanted to, yeah, like look at, first of all, circle back to GameStop real quick. Yeah, there we are now at that area here. I think we might touch the 20 and actually close the gap. And I said, once we do that, we can. I just don't know what the price is going to be. So like how much we're going to get for it. So, but we can then sell 3 of those. So I don't want to just post the order for 200 because we might get more. As you can see already, so if we fall to, what was it, 20.18, we could assume like right now there's like 200 to 200. Yeah. Right now we are at GME at 21.45, and that's already above 200 for the, or around 200 for that. So I don't know. Let's post them for 220. So sell free May 21st, so for Friday put options, yep, for 220 credit, yep. So there we go. So we get $660 minus commission, blah blah blah. Yeah, there we go. And so if we drop 220 as expected, or if the price for some other reasons, the options price spikes up, we sell that, and we have another, in that case, then 11% return on the investment for 3 days. So, or potentially 11% return. I think that's okay. I have a few other things on the list. The first one was the SPWR. There, yeah, $2, $2.50 cash secured puts would work here, because question is, are we done here? So, but $2 is pretty much almost the low point. So question is the premium worth it? So SPWR, yeah, not worth it. So then Riot also has an interesting chart. If we, yeah, look at the daily chart, it's pretty much around 10. So, and it looks like, I mean, it looks like 1, 2, 3, 4, 5. And then question is, that's A. That's B, probably till here. So 5, 3, 5. And then that's C. And if that's already the end of wave C, because then basically, then that would be 1, 2, and we should not go below that. And that would be the next one too. So we shouldn't go below 10. So if we, yeah, but the premium is variable. So, okay, that would be for this Friday. And we're very close to 10. So it's like kind of like a riskier play here. But it's not worth it for that premium. If we would get more, then yes. But yeah, I mean, obviously it's like 1.65% for 3 days. But yeah, like there, rather than do something else. Now, on the other hand, we have Target. Target, I think, so that's also on my list. Target has, in my opinion, if we zoom out a little bit, yeah, also completed a pattern upwards. Doesn't matter where it started. Okay, now we have to wait for it to finish loading. But either it's 1, 2, 3, 4, and we go up from here. But even so, no, it's probably bigger, and that's like the last wave. And then that downward is either ABC and we go further up. Yeah, again, I'm not going to spend too much time on looking into the details, because we try to make the trades that have low enough risk. Or that is actually 5 waves, ABC, and now we have the next 5 waves down. So, and if that's the case, if we look on a daily chart, that kind of, yeah, like, I mean, on one hand, that looks like 1, 2, 3, 4, 5. Then we would only have ABC here, and we actually would go up from here. Okay. Can that be 1, 2, 3, ABC? I mean, it could also be corrective. So basically, if I want to, I can count this as ABC. A little tricky. With those strong moves in between, a little harder. How much did we retrace here? Did we by accident perfectly hit one of the levels? Or by, yeah. So very often when we have a 5-wave movement, we would expect the retracement that then happens in the correctional wave based on Elliott Wave Theory to turn around on the 38.2 or 61.8 and sometimes 50%. And more on the rare side is 78.6. Yeah, I don't know why it happens. It just is often enough the case if we look at the indices. Yeah, and if that, yeah, I mean, that's not a nice bounce on the 38.2, but it's still then considering the option prices for target. Are we already on target? Really? Okay, so if we take the June 21st option, okay, yeah, it's a couple $100. If we would buy that one here for the mid price, and our profile would look like with a break even of 144.26, 144.26, it's pretty much where we almost are. And if we were to fall down to, let's say, 125, actually a good payout, 1 to 10. That price, you could almost just get both of them. So buy both. So then the overall risk is 560. If we go to 125, 1500 plus. If we go on the other hand and recover. So where's our break even there? Break even 141 and 153. Yeah, so pretty much we would say as long as we are below 140 and above 153, so as long as we don't move sideways in that range, we would actually be in profit now. But on the other hand, we risk 580. Not sure. Okay, we'll consider that later again. Yeah. So it says profit probability 42%. Considering the strong move, I don't know. Like I don't think it makes sense to expect like little movement. So we have that gap here in between. Anyway, moving on. So target for now, no. And then we have Chewy, which is interesting because it's the company that the currency of GameStop originally made go up, and that has been going down. And if we look on the monthly chart, it looks somewhat like this, and it looks like we have 1, 2, 3, 4, 5 waves down finished. And if we have 5 waves finished, we could actually get a call option. Again, depends on the price, but with the lower value, the options also should get cheaper. So we could, for example, for that we'll have to look closer again. 1, 2, 3, 4, 5-ish, yeah. And then from here, what happens from here? Do we go further up? Then we would basically get a $17 call option. If we reach 20, it's not worth. So risk reward is not good here. So okay, so that's that, and that. And then there is one more thing, and that was like looking into, gonna replace Chewy on my list here with QQQQ. And then that we're gonna replace with SPX. And the other one was XSP or not? Yeah, that one, iShares Core, mini SPX, that's what we want. Yeah, so because it's cheaper. So I'm curious about the 0 DTE, so the 0 DTE options. So if we, let's check, do I have the, on the SPX, they're probably too expensive or not, so. Yeah, it's like a 10% risk, whereas here they are cheaper. Now, if I were to buy this just as a mental exercise, learning more about options, our break even would actually be 531.50. And if we were to, I don't know what's the average movement. Usually I used to trade the Nasdaq more, so that was XSP, yeah. Index, yeah, so XSP. So what's the average move of that thing? 6 points. Strong move would be 9 points. Small move, still 3 points. So actually not that bad, yeah. So it gapped up today. There we don't have. And if we look at the SP or the, we don't have it here. Okay, SPX. Button. And there is also the SPY. Yeah, so pretty much. So if we look at SPY, how is it there? So just a comparison. So currently it's 529.16. So wait, have to sort them again. So XSP has option in also in $1 steps. Okay, so and there we're now at 513.12. So technically 80 cents away from this, which means we would have to move 140 or 130. And if we look at SPY, there we are at 529.24. So also around 80 away. And our cost basis would be 75, so it's similar. Okay. And yeah, anyway, and the SPY itself is too expensive for sure. Yeah. So although no, I mean the SPX is too expensive. There we would have just too much risk. Yeah, that's not worth it. Although we would have a more granular approach. Yeah. So, but since all of them are following the same pattern, here we should have 24-hour data or almost 24-hour data. So that would be 1, 2, 3, and then 4, and then we would actually be currently in wave 5 according to this. Yeah, not sure if I agree, but my idea, and I haven't tested it, so I'm just trying to work it out, would be to just identify the pattern on a small time frame. So if we can recognize some 1, 2, 3 pattern in one direction, we could then get the call or put option 0 DTE, because if we're right, we stand to, so that option costs, for example, $50. I mean, we obviously would have to do that at market open. So yeah, so look like what's the pattern for market open, so we have the maximum time to be right, and buy them as close as possible at the money, so we don't have to be right about how far it moves, but then it just varies like how much profit we would make. So if we, I mean, obviously there will not be a move like this, yeah, but we can see that, I don't know, so 530 to 35 would already be like 12 times the investment, and the investment is so reasonably small, so between $50 and $100, that yeah, like we don't have to be right too often. Like if we look here, for example, that looks like 1, 2, 3, 4, 5 potentially, or 5 here, or then A, B, C, and which means that's the next. That could potentially be the next 1, 2, 3, 4, although now we're dropping a little, and then 5 up. Yeah. So although today we actually started dropping down. So similar to here. Okay, 5 minute is probably too close. If we zoom out a little bit. So we gapped up. That was NVIDIA earnings, where everything opened high, and then we rallied down. But although from the looks of it, that's already that's already ABC, which means we are in an upward movement here. The question is just how that here fits, like what happened here in between. How does that fit? Yeah. So where are we going from here? So if that's 1, 2, 3, 4, 5, that could actually be, so that completes the 5 waves up. Then we would expect, again, for today it's already too late, because we should do that at market open. So we should, before market open, try to determine the direction, and then just get one cheap option instantly at market open, or even submit the order before market open with like $50 that we're willing to pay in premium. Or we cannot submit. No, we might actually be able. I'm not sure if we. We'll have to check. And then take it from there. So basically, If that's 5 waves, then we would expect that we potentially go down here, which would be 529. And we are at 529. Okay, that's going to be an issue. So 529. Should be 529 or not. So I mean, it should be just basically more or less divided by 100. Yeah, so they were too late to the party. Okay, we know that now. And we can do the same. For that, we need the XND, which would be the micro NASDAQ. And there, however, there the options are more expensive. Okay, so there, that whole thing. Oh, that's 24. Oh, weeklies. Yep. Oh, same thing with the NASDAQ. Okay, so we can also there. Let's check the NASDAQ then. NDX, where are you? NDX. 1, 2, 3, potential 4. Okay, so 15-minute chart. ABC, so similar, potentially 1, 2. Okay, so we'll have to do that tomorrow before market open to basically get an idea and then just put our, in quotes, $50 bet. And if we're right, it's a couple $100 payoff. If we're wrong, it doesn't hurt that bad. Yeah, our GameStop order hasn't filled yet, so let's check GameStop. And there, okay, we went down a little further, and we again have a little bit upwards movement. And then, yeah, I think that we will go close that gap. The question is, will we get paid what we want for the put options? If yes, it would be a nice addition this week. So right now the $20 put is between 130 and 139, and we actually would like to get 220 for it. So yeah, so we just have to wait. Now the other thing that I have to check. What was that? That was not Riley, but Pewdie. Yeah, so Pewdie starts a correction, which is nice. So, and I think it will, so that might be 1, 2, 3, 4, 5. Now ABC a little higher, and then another push down, and I think it will reach my order at 0.26. Might be wrong, but I just think that's gonna play out the way I think it will. Yeah, there we'll have our surprise tomorrow, either good earnings and we shoot up, or bad earnings and we drop down. FFIE is still above $1, so that's fine. And then the other one was that one, yeah, up 20%. We're still at a loss, okay, but I think that will turn out as 1, 2, and then 1, 2, 3. So I think that will go up. I mean, the other option would be A, B, C, and it goes down, but again, the risk here is also quite low. Now, however, I have to look up again how the limit order thing works, or trail limit order. Okay, so basically what we would want to do in case of circle back, in case of GWAF is if it reaches 15 cents, although we have quite some swings here, so yeah, if it reaches 15.2, we want it to trail from our buying price. Yeah, so GWAF gets removed here, and then select it here. We say position, we say sell, we say trail limit. And we said once it hits 15.2, so our limit price is 0.502. Then that price here would be our average buy-in, so that would be 0.084, yeah, 5 actually. And then we want to trail it in 0.01. Yeah, so that should be it. So, and that should be for entire position. So, and that should be fill outside and put till cancelled. So if we submit that, if I did something wrong, it might close the position now and I actually realized a couple dollar loss. But if I did it right, order contains, please correct, invalid stop price. Okay, stop price is the SDP and the stop price for us should be our, maybe we don't have that many commas here, so 0.0850850. So okay, so we have the trailing order. I'm not sure if we see it in Motivator, by the way. Trail limit. Okay, so there it says. I'm not sure if I understood it correct. So basically, our trail limit, we have it for the entire quantity. But that's the stop price. Wait, the limit price, the stop price. So limit price would be limit offset. Where's our limit price here? Trail limit. Limit price. No, the limit price that I wanted here is 0.1502. 0.1502. And the stop price is 850. Yeah, Smith. So that should be the right order. Yeah, and that should then now also update here or not? No, it still stays here. And what does it say here? Why does it not update that? $0.15. So I have two commas here, so it's like really 0.1502. That's the trailing price that I want. But it still keeps the stop price like this. No, that I don't want. So set the limit price to, okay, let's cancel that. Try again. Sell entire quantity and we use a trail limit. Okay, the limit price would be 110 in the example. So if I would like to create and only activate, so that would be for me 0.1502. That's the price I want to activate. Yeah, and then trails from there at a 0.5 difference. So that would be again 0.0850, and our gap would be we want to trail in cents. Yeah, so again, fill outside, good till canceled, submit. Okay, so and now it still says stop price 0. Why?
Order cancelled.
Okay, one more time. Sell position trail limit. So here we would have, as I said, 0.01, so 1 cent. Our stop price would be our buy-in, so 0, so we cannot lose anymore. And our limit price would be 0.1502. Trail limit, fill, good till canceled, submit. Still shows it like this. I don't understand. Oh no, there. There it says now 15.2. So that somehow worked now. Let's check that order. Yeah, no, that somehow worked. So that should be set here. So if we're in quotes right and we reach this point here, then it should start to trail from here. And depending on how the pattern turns out, we might make more profit or less profit, so that I can live with. Yeah. Now the same we can now do for here, where we said, okay, we assume we go at least to 42.81. Yeah. So we replace that order real quick. So cancel. And then we say here, sell full quantity, trail limit, 0.4281. That would be the price we wanted to reach. And our stop price would be 0.16.22. And we also would trail in 0.01 cents. So, and also fill outside and good till canceled and submit. And if we look at that, so it should also look okay on the chart. Yeah, so now we have the right stop orders. So if we hit that price, we start trailing from here. Okay, so that's finally done. So yeah, so we checked the 0-day options. We looked at GameStop. Now, obviously, we could have been a little bit more active there. Right now, we are recovering. Question is if that will be the bottom here. But I think, again, I said, like, we may have missed our chance to sell those options for a good price. So, but I think from the pattern ABC that we should still go lower here. If we were to get above 24, that would be the sign that there will be that the bottom is already in quotes in for that pullback. And again, we have to keep in mind that we're looking at the 1-minute chart. So if we look at something more decent, so it's possible that that's already our turnaround point. Yeah, so that is basically 1, 2, 3, 4, 5, and now that's A, B, C, and we go up from here. But I said I think that will get down to the 20, which would, if we remove the extended data, which would close that gap here potentially even. And if we go down there, I can definitely sell the 20 put options for the price I want. If we don't go down, then yeah, then I probably would sell an option today at, I probably would still sell the market, the $20, but I would sell then one before market closes today. So if the order we have here doesn't trigger for the price we want, although one shouldn't be greedy, blah, blah, blah. But again, I think that we will close the gap. And if we close the gap, then that would be the way to go. I'm still wondering why there is no volume at all for INSM. Maybe it's like trading is paused for options, right? Or I don't know. Like, I mean, there seems to be nothing going on, or is there? No, there is something going on. So there's some movement in bid and ask price, but there is low volume. Yeah. So seems that the calls, they are. It's because the calls are all in plus, of course. Yeah, nobody's gonna sell a put when the price is already at 50. So. Although you could still sell the put. I mean, there are people buying it, so yeah, but not the put that we want to sell. So for us, there is no price, yeah. So we could offer it. We could offer that we buy it for 1 cent. Cost impact would then be basically $2. So from the 126. Yeah, so that would be a loss for if somebody sells it to us for $1, they would pay more in commission. If we buy it back for $5, I mean, it would free up capital. Yeah, so if we say we theoretically buy it back for, or somebody's actually asking, okay, so gonna buy it back for 5 if we can. It actually triggered. So our INSM is canceled out, okay? So, which is good for us. Just need to update. So it freed up capital. Yeah. Yeah, just a second. Need to basically drag this, and that's again the wrong thing. So over here, so I can update. So that was INSM, where we now have that option closed. And on the other hand, we bought back, and today's the 28th, 24. We bought back 100 shares, and we bought it back for 0.05 plus 1.5 commission. So we bought it back for $6.05. So we pocketed the $100 profit here. So that's good. Yeah. So theoretically we could now sell put options, but the next expiration date is June 21st. Call options are now hugely overpriced, of course, because all of them are in the money, which actually, yeah, that might actually really propel the stock further. I mean, assuming it stays above, assuming it stays above 40, all the options are in the money, which means some of them, 10% will get exercised, which will create another push, yeah, so that will be an ABC pattern. But yeah, but there are no call options more for us to buy, so they're all overpriced right now, yeah, so yeah, we're gonna stay out of this, yeah, I'm gonna stay out of this one. Now what we did this, we have our GameStop option that we're willing to buy. We adjusted, we still have our, how's Beauty now moving? Is it moving at all? Is it further going down? No, it's like slightly going up. Okay. So maybe, I don't think it's already done with that movement. Yeah, it doesn't make sense. So it's possible that's already the ABC movement, but again, I think, okay, if we go higher than this, then maybe it's already done. But it could also be 1, 2, 3, 4, 5, ABC, and then we go down further. Okay, we keep that order the way it is. Okay, and now with that, our capital commitment just reduced because we just got something back. So our remaining capital commitment would be the 40 from the GameStop risk reversal, the 0.5 from the FFIE, the 10 from the GameStop put, the 1 from FFIE, and that's it. Yeah. So oops, now I had a typo. So 40 plus 10 plus 1.5 basically. So times 100. So we have $5,150 commitment, where on the other hand, minus this. So we could sell potentially a 4th put option. So, but that one we also, okay, obviously, that one we also would list for, can I just change the quantity here? Yep, so we just would say 4 here. Yeah, and I said, if the price doesn't go down from GameStop, then we will just, or I will just, today before market close, I'm actually going to set myself a reminder for that. Today at, that's then at 5 and priority high. So I will just then adjust my price if it's still worth it. I mean, we have to consider it's just 3 days. So I believe we don't fall towards, I mean, I believe we will close the gap potentially briefly going below 20, but then we go up further, which means I just don't want to sell those put options for only $120 when I can potentially get more for them. So we actually would be, if we fall to 1970, we would actually look more like this. So listing them for $220 actually makes sense in my opinion. But if by market close today, it looks like we're not going there, then I will just consider either getting the 20.5 or taking the 21s for a lower premium, because it's for 3 days. So obviously getting an 11% return potentially in 3 days is insane. So I mean, that would be like 6% return right now roughly, which is also good for 3 days, but I'm just like being slightly greedy here. Yeah. But with that, I think I'm gonna switch here. With that, I think we're gonna call it a day in this episode of Daily Market Mastery. It's been a little longer. How long are we online now? I don't see that. Do I see that? I don't. Oh yeah, 1.5 hours. So yeah. Yeah. If you like what you saw, don't forget, like, subscribe, enable notifications. Yeah, like I'm planning to do this almost daily. There are days where I'm busy with other things. But since I'm anyway analyzing the market, usually around market open, I will probably continue with that format. Yeah. So if you have stocks that you want to look at or so, or if you disagree with my analysis or so, the chat is there to share your perspective. And yeah, then that's pretty much it. So I'm gonna say thanks for tuning in. See you all in another stream, and good luck to all of you out there trading. Till then, bye bye.